Okay, so Google just made a staggering $200 billion bet, and honestly, it is sending absolute shockwaves through the entire semiconductor world. We are looking at a massive, completely unprecedented expansion in AI infrastructure. But here's the fascinating tension, right? As Google ramps up all the spending to build the future of AI, they're heavily relying on hardware titans like Nvidia. But at the exact same time, they're aggressively designing their own custom chips to potentially replace them. It's a high-stakes ecosystem battle. So in this explainer, we're going to literally follow the money to see exactly how this whole strategy plays out.
Right, let's dive right into this. The whole story really starts with this one mind-blowing figure. Alphabet just raised its 2026 capital expenditure outlook to somewhere between $195 and $205 billion. Just take a second to really process the sheer scale of that money. I mean, we're not just talking about writing some software code here. This is pouring literally millions of tons of concrete. It's laying thousands of miles of cables. We are talking physical data centers, cutting-edge AI accelerators, insane high-speed networking, and just the unbelievable amounts of power and cooling you need to run the whole shebang. Every single extra dollar Google spends on AI creates a massive revenue opportunity somewhere else down the line in the semiconductor supply chain. And that is exactly why the entire tech world is laser-focused on Alphabet's checkbook right now.
So naturally, that brings us to the ultimate question. Who actually wins here? With $200 billion in motion, this stops being just a simple infrastructure upgrade. It's turned into a full-blown three-way collision for the future of tech between Google, Nvidia, and Broadcom. Look, Google absolutely needs enormous computing capacity to train and run their AI models. And traditionally, well, that meant buying absolutely everything from Nvidia. But Google's strategy is evolving, and that evolution is dragging companies like Broadcom right to the forefront. Let's look at exactly how Google is basically rewriting the rules of the game here.
See, Google is shifting away from just exclusively relying on off-the-shelf Nvidia GPUs. Instead, they're moving towards running their own custom-designed tensor processing units, or TPUs. Basically, they are tailoring the silicon to their exact specific mathematical needs. So instead of buying a general-purpose chip, Google's designing hardware specifically for its own unique workloads. And this is a massive deal because it gives them so much more control over performance, hardware supply, and ultimately the underlying economics of actually running AI. Oh, and you want to know what's really fascinating? Alphabet has actually started recording TPU sales recently, which kind of suggests these custom chips might actually become a commercial product you can buy, not just a secret internal tool.
But hold on, the crucial point here is that we absolutely cannot write Nvidia off just yet, not by a long shot. Because AI compute, it's a deeply integrated ecosystem. It requires incredibly high-speed networking, advanced memory interconnects, massive power infrastructure, all these areas where NVIDIA's platform is just incredibly sticky. Their big advantage isn't just the physical chip itself, it's the entire software and hardware platform they've built completely around that chip. So Google is for sure still going to use NVIDIA systems for workloads where flexibility and software compatibility are key. The real mystery is just how the mix between those two approaches changes over time.
Let's move along and see how this builds this massive opportunity for another major player, because this is where Broadcom enters the chat. See, Google doesn't manufacture these custom TPUs all by themselves. Basically, Google acts as the architect, right? They map out the design and exactly what the workload requires. But they need Broadcom to be the master builder. Broadcom steps in and translates those custom designs into physical, actual manufacturable silicon before it ever gets deployed. And let me tell you, this is a brilliant, highly lucrative business model for Broadcom. It gives them direct exposure to literally one of the world's largest AI infrastructure buyers without Google ever having to buy standard GPUs.
And all of this creates what we could call the central paradox of this current AI boom. Just think about it for a second. Google is currently NVIDIA's absolute best customer, pouring literal billions into their coffers. But simultaneously, they are actively building the tools to replace them. It is such a fascinating contradiction. On one hand, Google's massive spending is incredibly bullish for NVIDIA, simply because Google desperately needs an astronomical amount of raw computing power right this very second. But on the other hand, Google's aggressive push into custom chips, that's a looming long-term competitive threat to NVIDIA's whole dominance. And sitting right smack in the middle of this paradox is Broadcom, just being elevated by Google's desire to control its own destiny. So to really make sense of this as an observer or even an investor, we have to separate two very distinct questions. First, how much AI infrastructure will Google actually buy? And second, who ultimately supplies it? It's absolutely vital to keep these separate,
because that first question determines the overall size of the market opportunity, the total size of the pie. The second question determines which company actually captures the profits, basically who gets to eat that pie.
So where does all this money actually flow? I mean, when a tech giant drops $200 billion, it creates this absolute tidal wave of demand across the entire semiconductor supply chain. It's not just Nvidia catching the intense demand for raw accelerators or Broadcom getting the custom silicon and networking contracts. This stuff spills over everywhere. Memory manufacturers are seeing a huge surge in demand for high bandwidth memory. The semiconductor foundries are hugely benefiting from all these advanced manufacturing requirements. And of course, the actual construction companies pouring the concrete for the data centers are cashing in on the physical real estate expansion. It just goes to show AI infrastructure is this massive, sprawling ecosystem story.
But, reality does eventually come knocking. And it comes in the form of what we can call the AI ROI test. Because honestly, spending billions of dollars, that's the easy part. The hard part is actually making it back. Alphabet can spend hundreds of billions on data centers, but eventually those capital expenditures have to generate actual AI revenue. And not just revenue, that revenue has to be profitable, leading to operating profit, which ultimately has to result in free cash flow. Basically, the cash left over after they pay for their operations and these massive investments. If Google Cloud keeps growing rapidly and their AI services are a hit, hey, the math works out perfectly. But if AI monetization fails to keep pace with this staggering infrastructure spending, we are absolutely going to see some intense pressure on their margins.
Now, what's really interesting here is Nvidia's hidden long-term vulnerability. And it's this: the total market can grow while their specific share of it actually shrinks. For Nvidia, the biggest long-term risk isn't necessarily that the AI spending bubble just bursts. No, the real risk is that AI spending continues to explode, but hyperscalers like Google, Meta, and others increasingly just build their own custom chips. If those custom accelerators become highly competitive, the overall AI pie gets absolutely massive, but Nvidia's specific slice of that pie, it gets noticeably thinner. So an expanding AI market absolutely does not guarantee an expanding market share for Nvidia.
Conversely, this exact same dynamic acts as a massive, massive tailwind for Broadcom. The core structural trend we're seeing here is that hyperscalers are increasingly designing their own AI hardware. I mean, Google's TPU program pretty much proves that custom AI accelerators aren't just little experimental skunkworks projects anymore. No, they are moving straight into large-scale, mission-critical infrastructure. And Broadcom is standing perfectly at the intersection to capture all that demand for specialized chip design and the incredibly complex networking required to link it all together. Taking a step back for a minute, Google's ultimate endgame here is pretty clear: total control through vertical integration. They don't just want to be out there buying computing power. They want to own the entire AI stack from top to bottom. They want to control the whole shebang, everything from the underlying physical data centers, up through the custom silicon, the cloud infrastructure, and all the way up to the software stack and the actual AI models themselves. Because if Google can optimize this entire fully integrated system around its own specific workloads, well, they can radically reduce costs while simultaneously creating incredibly powerful new revenue streams through Google Cloud. Which kind of leaves us at a crossroads between two very different paths. In the bull case, the optimistic view, AI demand just keeps accelerating. Google monetizes its cloud super effectively, and the infrastructure market grows so incredibly large that there's plenty of room for multiple massive winners. In that scenario, Google, Nvidia, and Broadcom all thrive. But you've got to look at the bear case looming over all of this. If this new infrastructure fails to generate proportional revenue, you better believe these hyperscalers will slam the brakes on their capex. Poor monetization would lead to severe multiple compression for Nvidia, slower growth for Broadcom, and some intense, uncomfortable pressure on Alphabet to justify this $200 billion bet.
And that brings us to a final, absolutely crucial thought for this explainer. The AI chip war isn't just about raw computing power anymore. The next phase of the AI boom may not actually be about who can build the biggest, smartest model. It might just be about who can build the most profitable machine underneath it. Will Nvidia maintain its iron grip on the whole ecosystem? Will Broadcom's custom silicon model completely take over? Or will Google's massive vertical integration ultimately win the day? Look, the stakes are $200 billion and rising every day. Keep your eyes closely on the infrastructure, because honestly, that is where the real war is being fought.